Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Thursday, the 13th of August. Starting off with Angus Energy, I don't normally have a repeat on consecutive days, but the stock and the company seems to prove people wrong, so it's worth celebrating that. Current situation is that we're just toying with that old peak around 1.22 pence, above that on an end-of-day close basis, and the top of the rising trend channel from way back in September. 2 pence could be on the cards over the next, hopefully, couple of weeks, so it shouldn't take longer than that. Obviously, COVID stocks have been divided in terms of their fortunes of late, but the quality seems to be coming through in terms of the winners and losers, and 40 Pharma looks certainly well set at the moment. We had the mid-move consolidation bull flag right around the 200-day moving average, just under 67 pence. That's a typical thing to happen. A little clear out there to tree shake down towards 60 pence as well, so we've got that out of the way. And end of day close above the top of the flag at 75 pence should easily be enough to take the shares up to retest that old April high and towards 100 pence, very much possible. This stage, probably we wouldn't even expect to see an end-of-day close back below the 200-day moving average, and so that's probably the best stop loss at the moment for people who are close to the market. Obviously, if you like the stock, you just stay in there and keep on plugging away. Seems to be a windfall for interpersonal finance, and that is good in terms of the charting, obviously. We've had a gap higher through the 50-day moving average, 60 pence, so that is one of our more useful signals. We've also broken a tight near-term triangle for the shares as well. So the view of this stage is that while we're above the 50-day line and the floor of the channel at 60 pence, the upside here could be towards the top of that rising trend channel from April towards £1, hopefully over the next month or so. Stock which I didn't really want to cover because I don't think many people watch it, but at least the charting situation is good, too good actually to not do it. Breaking this falling wedge, gapping up through the 50-day moving average at 51 pence, and the view at this point is that while we're above the 50-day line, we could hit the top of that broadening triangle from April up to 80 pence plus. Obviously that retests the turn of the year resistance on the shares, but I suppose the hook there, the break of the triangle and the gap, which is clearly still unfilled. Another stock to look at in terms of recovery, difficult situation, a lot of people willing it higher and so far not quite working, but there is the point of note for NSF and non-standard finance is really the way that the lows that we've had for July and August have been accompanied by higher RSI traces, so that does suggest that we've got bullish divergence in there, buying interest, at least on the stealth, and obviously we've also had higher support for the shares during August versus that low at 2.9 pence in July. If you're cautious, maybe you wait for an end-of-day close above the initial August high at 4.63 pence. That's probably the easiest thing to do. That's neckline resistance at the moment. But there is some case for saying that while we're above the initial August support at 3.4 pence, the shares are already in buy mode off the back of the bullish divergence. Initial target, I suppose, up to the pre-gap down high at 5.4 pence. If you're already in that situation. A request today, which I've never actually heard of the stock, which is quite an achievement because I normally know almost every epic code in the market. Rua Life Sciences, obviously anything in the life sciences area at the moment tends to be quite hot. What you can see here on it's not much of a chart, but what you can see here on the chart as is the way that we've broken that triangle around 105 pence and an end-of-day close above the July triangle. It could lead us up to the top of the overall trend channel from June, heading up to £1.60. Only back below, I suppose, the recent support area of 95 pence would really delay the upside scenario. But the real hook for this one, apart from the break of the triangle, is actually the gap higher that the shares had at the beginning of the month, and the way that despite dipping, they weren't able to fill it. So that's normally a plus point in terms of the technicals or the charting, at least, for any stock or market. Going on from a stock that probably hardly anybody knows to one that I'm sure almost everyone knows, Synairgen. If you can come through here, you can see that there's a bit of a mishmash of trend lines there from before, but you can see that the shares sort of went into consolidation mode after the massive spike last month. Probably the best thing to say at the moment is that while we're above the 20-day moving average, we could still hit one of the resistance lines I drew there up to £2.70. If you're looking for a more sort of definitive break in terms of momentum, I suppose an end-of-day close above that line, above today's low, which is £2.17, would probably do the trick in terms of giving us the momentum for 270 or 280. But basically, while we're above the 20-day line, we're still very much in bull mode, and as an extra trigger, 217 plus on an end-of-day close should give us a fresh, sustained rally. Stock which is still relatively obscure, I would guess, is the next one, the Panoply Holdings. The only reason for including it today is because I believe that I probably included it before the latest rise to the upside sub £1, and it's always good to see a technical target hit, especially when it looks like it's completely pie in the skies. £1.40 did look when the shares were at 90p or so. As far as what we might see next is concerned, end of day close above 140, i.e. that trend channel there could deliver the start of a new leg to the upside, possibly up towards the £2 area, which would be the top of that more steep rising trend channel that I've just made up from May. So towards £2 if we can hold above £1.40, which I suppose looks as though it may be possible at the moment. But you can see it's a clear breakout for the shares over the near term. Always very difficult to make a call on a stock after it's been in a sustained downturn. We've had many false dawns all the way down for United Oil and Gas, but it looks as though the fundamentals finally kicking in for the stock. Big fundamentals, apparently, if you believe analysts' notes and various other sources. End of day close today above 3.5 pence should be more than enough now to deliver a lasting intermediate rally, at least for the shares, so 1 to 2 months on the upside. So above 3.5 up to the top of that trend channel from April last year at 5.25. At this stage, already back below that broken resistance line from July around 3.1 pence. Would really delay the upside scenario, so let's hope that doesn't happen. But given that you're not risking too much down to 3.1 pence and you've got potentially 5.25 as the upside, it actually now becomes a reasonable risk-reward trade. The reason for also being quite optimistic is the way that the RSI had several tests for support at the neutral 50 level, which tends to be a decently leading indicator on the buy side. It wasn't certainly the case in January, but this time, along with the trendline break, looks like United Oil and Gas has finally made it. Alien Metals is next, and here we can see that the shares making progress in terms of finding support at former resistance at 0.25 pence. So above that, looking for a retest of that, the top of that price channel at 0.32 pence, and the big target here up to 0.5 pence, which is a May 2019 resistance line projection. So hopefully there's support in place at 0.25 and up above that up to 0.5 pence. Interesting to see how the next stock is performing after recent attempts by the bears to undermine the rally, let's put it that way. We've got the situation here where we've had a rising trend channel from April. Previously suggested target before the bear action was up towards 25 pence, and it's interesting to see the way that the stock, a bit like 4D Pharma, tested for support, shook out the weak bulls rather yesterday, and now looks set to head higher. So above old resistance at 14 pence on an end of day close basis, looking for 25 pence on Verditek, and as a best case scenario, maybe up to that long dated resistance line projection heading up to 25 pence. If you're cautious on the stock, obviously wait for an end of day close above the latest peak at the initial August peak at 19 pence. That's it for me today. More updates tomorrow.